Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, October 28th, 4:52 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video, the Big Show edition, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market, big picture, long term, still in a correction. This took a little bit of got a little bit weaker today with our first close by any index above the 200-day moving average. You'll see that when we get into the charts, but very clearly in a short-term uptrend and making higher highs today. What a difference 24 hours makes after watching Amazon gap down big time yesterday and taking the indexes with it, and then Apple initially opening with a gap down, but a strong comeback and a very strong effort today to cement the short-term uptrend. You can see over here on the trend gauge, we've got leaders at bullish/neutral, short-term 21-day. Reclaimed, the NASDAQ 100 reclaimed it today, so all bullish there, all five indexes above our short-term 21-day exponential moving average. Medium term, we've got four indexes now above the 50-day moving average. Why aren't we off of downtrend yet? Because the NASDAQ 100 and the S&P 500, which we weigh more heavily, NASDAQ 100 not above the 50-day, and we've only got one close above the 50-day so far on the S&P, but you see the arrow pointing green as we're trying to get off there into neutral and hopefully to bullish if we can get the slope of the line to turn. That's another fly in the ointment, the downtrending 50-day moving average. And there are some much higher prices 8, 9, 10 weeks back, so it may take a little while for the slope of this to change. Long term, still with the red arrow, but for the first time in 6, 7, 8 months, 7 months, you've got a little shade of green here, and that's with the Dow closing above the 200-day moving average. So here's the rundown today. What just happened? Apple-led rally. G6 didn't outperform today, but as I said, what happened today? Apple-led rally, S&P back above the 50-day, not just going above it intraday, but a firm close above it and a higher high over the last 3 days when it was trying to get above but failing repeatedly. And the QQQ didn't think there was any shot of us seeing this today, but back above the 21, really big day from Apple. So the G6 up 1.9%, S&P 500 open flat. In fact, we pretty much opened flat across the board except for the Dow up 0.5%, but huge comebacks. The lows put in basically right in the opening minute. S&P up 2.46%, NASDAQ 100. NASDAQ 100 up 3.06%, Dow up 2.6%, mid caps up 1.8%, Russell 2000 small caps up 2.25%, global diversified 60/40, stock and bond up 0.82%, in-house. GROTECTION up approximately 1.29%. We continue to add exposure as we see our initial investments gain traction, and that's what we'll continue to do. We didn't miss the 20. We didn't take part in the 27% drawdown, so we have time on our side, and we need to wait for our short-term and medium-term technical signals to tell us to continue to add exposure first of all, and then to continue to do it when we're seeing progress. We'll then go through the tail of the tape and the updated 21 over 21 list, but first let's go through the process, our quick take on our process here at Revere. How do we determine whether we should be in, partially in, or out of the market? And it starts with, I'm using the S&P 500 as an example, but we really look at all 5 of the major indexes. The major weights are the S&P and the NASDAQ 100. And when they're trending nicely above the green line, that's our short-term 21-day moving average, The red line, that's the medium-term 50-day moving average. The black line, the long-term 200-day moving average. When we're trending comfortably above those and the lines are configured in the way that I'm showing here from last October and November, then we are as long in the market as we possibly could comfortably be. If things start to roll over and head lower, our stops will take us out of the market. If we really start to head lower, the slopes of the lines will roll over, and that's signaling a downtrend on those time frames. And then if we break the black line, the 200-day moving average, this is when we really get our defenses up. We're fully defensive, and the reason for that is to avoid these severe bear markets. They all take place below the 200-day moving average. On average, high to breaking the 200 is approximately 12%. So look at all the pain that you can save if you get out of the way and a full bear market does kick in. In this case, January to October, we had a 27.5% drawdown. We need a 38% uptrend to get back to even. We're about 10% off the lows now. If you're approaching retirement, you can't afford to give up this mental capital, emotional capital, and your actual physical capital. And that's why we make risk management our primary concern, our primary focus here at Revere. You handle the drawdowns. The gains will take care of themselves when we return to a bull market. Plus, you'll be capitalizing, you'll be compounding from a much higher capital base because our drawdowns only spent one day over 10% this year. And right now we're about in the sevens, maybe low eights. So let's get into it. But first of all, I want to show you not only do we have rules for getting out, but we've got rules for getting back in. We participated in this uptrend off the lows. We're participating in this move up off the lows. Many tactical applications of technical indicators. We review them here every night on video. The most transparent registered investment advisor you'll find. In this case, it was an undercut and rally of a key support area that triggered us to get back in. Then we got back above the 21-day moving average. That's the green line. Then the slope of that ticked up. That gets us a little bit more in. Plus, we got stopped out on a couple of things during this move higher, but for the most part, we're seeing good returns on our investments. So we continue to add capital. And if you're interested in an approach like this, you don't have to be at the mercy of the market. You can make decisions based on the health of the market. Give me an email, Don at revereasset.com. You can also email Dan, that's Dan Stewart, Revere President, at dan@revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. And you give us a shout, you'll be shocked at how quickly we get back with you because we are extremely customer focused here at Revere. So here's the S&P 500. And as I said last night, big gap down before Apple came out. We took some, our stops got hit after hours on part of the UPRO long that we had. I talked about selling a little bit of that after hours yesterday. But all we did, you can see this key 3,800 area here. It's where we broke down on September 21st. We tried to get back above it here on early October, but failed again. Got back above it on the 25th this week, came back and tested it Thursday, and after hours, a big shakeout and recovery. That's a signal that it's very bullish. And look at the day that we had. Opened at the lows, finished at the highs, higher recovery highs off this 3,500 undercut. So we've gone from 3,500 to 3,900 in 2 weeks plus 1 day. And as I said, we're continuing to see gains in what we're in our account balances. Now, this 3,900 area is a big resistance area. You can see it was support back here mid-September. We broke it, tried to get back above it here in late September before we failed and rolled over for that latest move down. Let's look at the NASDAQ 100, this is very clearly the big surprise. on the day. If you'd have told me the NASDAQ was going to be positive today, I'd have said, no, I don't think so after yesterday. But man, Apple had a great day. We'll look at that chart momentarily. But you can see the fail and the break below the 21 yesterday, down over 3% after hours, after Amazon came out. People panicking, waiting for Apple, and Apple came out, gapped lower, but that only lasted a few minutes. Then it went higher, pulled back again, and very strong up day for Apple. Let's take a look at Apple right now. I kind of said last night in the title, can Apple save the indexes? And if you look at what this did, I mean, the numbers are not that good. Earnings up 4%, sales up 8%, but people just so concerned. There were reports of Apple pulling back production on their iPhone. They said that's just absolutely not the case. In their conference call, they're selling as many as they can make. They're behind on some of the models, but so here you see Apple. We tried to get above the 200-day moving average, but that was a little bit of resistance today. So this is going to be one of the keys for next week: is can Apple recover this 200-day moving average? But certainly for now, we'll be happy with a 7.5% gain on 88% above average volume. It's very clearly the leader. It's in the Dow, it's in the NASDAQ 100, it's in the S&P 500 with the biggest weighting on, well, not in the Dow because the Dow's price weighted, but the biggest weighting in the NASDAQ 100 and the S&P 500. We want to see this get through the 200-day moving average, and hopefully the indexes will follow. So there's Apple. Let's go to the strongest of the indexes. Continues to be strong. The Dow Jones Industrial Average, you can see, clearing the black line. Now, it did clear it and was the only one to decisively clear it back in mid-August on this last move off the lows before this recent move off the lows. But a clear break above it. This is something else very key that we'll be monitoring next week, as that 200-day moving average is at 32,644. So any pullback, we want to be contained by that. But wouldn't be surprised if we pulled back and closed below it for the couple days, because I mean, this is 6 straight positive days on the Dow Jones Industrial Average. Very strong move indeed. MDY, let's get back to mid caps here. I talked about 2 closes above the 50, but also 2 closes at the low of the day. Well, we busted above the highs of the prior 2 days for a 3rd close above the 50-day on mid caps. And then small cap, same thing. We had 2 closes at the bottom of the range, although above the 50-day. Cleared the top of the range of the last 2 days. Lots of bullish signals here. You can see the line really starting to flatten out on small caps, as they have outperformed over the last 3 months relative to their big cap brethren, as the big tech type stocks have come under distribution. So there are the 5 major indexes. Let's take a look at bonds now. TLT, inside day here. So 3 of the last 3 days up, now taking a little bit of a break as it comes into the 21-day moving average. So price being down, yields up a little bit today. Let's take a look at the TNX. This is the yield on the 10-year. And you can see it bounced at the 21-day moving average. So now we've got the down sloping 8 and the flat 21. This is something that we'll be monitoring again very closely next week. Let's go to the dollar. The dollar was positive today, but it didn't hold stocks back, hanging right around this 50-day moving average, 2nd day up after 3 out of 4 big days down. Again, something that we'll be monitoring. Notice the hook up in price. If this bottoms and goes higher, that's going to be back to a headwind for stocks. There are a lot of crosswinds, headwinds, and tailwinds, and they're all battling it out. And they impact the overall indexes, and that trickles down to stocks. Unless you get a big reaction like Apple that dominates the indexes, and then it's the tail wagging the dog, so to speak, in that case. But let's go to the VIX also and see what happened here. And we late last week and earlier this week, we cemented a move below the 21. Yesterday, or actually Wednesday, we broke below the 50. Thursday was a second close below the 50. Today, we broke below the 200-day moving average. Slope of 2 of the lines still continuing higher. So this is again, something that we need to be monitoring next week is what's the VIX doing. But for now, it's cooperating, and VIX lower usually means stocks higher, and that is what we're seeing. Now we're right around this 24 to 26 key area where you see it's a battleground area, below it, above it, below it, above it. 24 to 26, you want to see a move below 24 to give the indexes more impetus to the upside, but we're already in oversold territory on the VIX. Again, we monitor everything. Stochastics are a secondary indicator. Price and volume come first, but it is definitely something that we'll be monitoring. Let's go to Bitcoin next, BITO. We'll bring up a 60-minute chart, and you can see how tight this is. The flag continues over 12.5, up to 13, flagging now. You reinstate my alerts here, and we'll see who wins. 12.5, a break below 12.5 will be a failed breakout on Bitcoin. A move above 13 will cement the breakout. And finally, gold, GLD, the barbaric metal, down today. Very oversold, though. You can tell by the stochastic. Though that's a 60-minute stochastic. Let's take a look at the daily stochastic. It's up off of oversold. It's trying to bottom, but again, look, here's the relative strength line over the last 3-4 weeks, and it's just trending lower, which means stocks by far outperforming gold, as opposed to the prior 2 months before that, where price was still coming down on gold, but on a relative basis, it was outperforming. So much to be seen in these lines on these charts, from what's the S&P doing, to what the moving averages are doing, to what price is doing, and to what relative strength is doing. I'm really a fan of these Market Smith charts, but I hear they're working on getting them even better, so that'll be nice. So that is that's a look at the 5 indexes and the big ancillary indexes that we look at, or ancillary charts. But let's go to the tail of the tape now, and that'll set us up for the 21 over 21. So the headwinds continue from a macro perspective. Technically, the indexes are fine, and the stochastics are working in our favor. Put call at 0.94, VIX down 6% today, near this 26 level, but notice it's in green now, below the 21, below the 50, below the 200. Fear and greed ticked up another 4. It's in greed now. It can go a lot higher than that. The fact that it's in greed, it goes all the way to 99 for extreme greed. We're operating under the bull case. Couple of fits and starts in this, but overall solid action and higher highs since the 10/21 follow-through day. Bear case. Still long-term, with this being below the 200-day moving average on 4 of the 5 indexes. It's certainly in the background, or from a long-term view, still in a correction. But this is the current case. We use the short-term indicator for that, because that's going to be the first sign for us to be putting money to work. In the news, PCE inflation data came out. It was in line, or I think there was a 0.1% beat on the year over year. That caused some volatility pre-market. We spiked up, we spiked lower, we opened just about flat, but then it was off to the races. From the day count, second day down to 1 day up. Let's take a look at how we've been flagging on the S&P 500 as far as 2 steps up and 1 step back. Here's the big move off the low. 3 out of 4 days up, 2 days back, 3 days up, 2 days back. Now starting an up leg, and it's pretty clear on the 60-minute chart again here. We're just here's the big shakeout, and then the big fake out the next day, where it certainly fooled me in some of our positions that this was a false move, but then 2 gaps up. That second gap up faded for 3 days before the next move up for 3 days, now 2 days down, and now 1 day up. So stair-stepping higher on the indexes. There's always a wall of worry to climb. Expectations coming in were positive because we're under a follow-through day, but neutral after the tech earnings volatility last night. Didn't know how that was going to shake out, but strong move higher after a flat open. The S&P from support and resistance levels, we got back above this key SR level, which is we closed in between this level yesterday and then this resistance level 3850 above that also. NASDAQ 100, we got above the support resistance 275 to 277. Big level here that we need to get above is this 286.82. That's a big fib level on the NASDAQ 100. We're going to need to see continued strength like we did today. The question is whether or not those big NASDAQ stocks that were up today, was it just a dead cat bounce or an oversold bounce, or is there some confidence that they may be finished going down? As we know, we don't predict. We just watch the cards come out on the table and react accordingly. Here's the intraday action, really just basing and breaking out all intraday today. This is the key support level here on the S&P. 37.48 was as low as we got after the Amazon earnings came out. 20% down, that's big. They recovered quite a bit of it. Let's take a look at that stock before I forget. The chart of Amazon, and you can see this is a hammer undercut. Arguably, what you did here is an undercut, a false breakdown below this 100 level. Shook everybody out, and now you're back above 100. Is this as low as Amazon can go? We don't know, but we know we'll follow our gap rules, and the low of today is a key area, and it may be, in fact, that today got rid of all the sellers, and we did have a shakeout. But from down 20% to down 7%, that certainly benefited the indexes and certainly benefited Amazon overall. You can see the gap down, and then it just trudged higher during the day, as did the overall indexes. So where are we here? What was strong today? Aerospace and defense continues. ITB is home builders. XLK is tech and biotech. Oil started out strong but faded. Came back a little bit during the day, but for the most part, they finished down, although Exxon had a good reaction to earnings. Bonds were down, which means yields were up, and gold, silver, and gold and silver stocks were down. Other than that, it was mostly green on the screen. Still focusing on our breakouts holding. Vertex was one of the failed breakouts yesterday, and that recovered after earnings today. Hard to hold through something like this when you're down big one day and then follow that with a 9% up day, but definitely a positive reaction despite the fact that the numbers aren't typically what you'd see at a big growth stocks. And then the other one, Shockwave, that shocked us out yesterday, just barely back above the 50-day moving average on lower volume than the down day yesterday. I don't really know what this was all about, but it's a failed breakout. We had some pretty high hopes for this, but we got to stick to our stops. So we took the maximum loss, 0.2% of the overall portfolio on that one. In other words, down about 6.7% on a 3% position size. So in addition to our breakouts holding, we're watching indexes, VIX, and the dollar. How are they doing versus their short-term moving average? So when we started to see the strength today and we got back above the 38.30 level, we took off the SPXS. That's about where we entered it. And then we added some positions today. We bought LHX. This had several of these aerospace stocks have had big shakeouts, and add Harris to the latest one. Northrop Grumman, which was on the 2121 list, but we took it off because we bought Harris today. This also had a big shakeout to the 21 and then 2 strong days up. Will Harris repeat that? That remains to be seen, but their numbers aren't overwhelming, but they're better than Northrop Grumman's were. And we undercut the 200 and finished very near the top of the range. When we got back above the ADMA, we took a 2% position in this, so we'll be keeping an eye on that. And then we bought Enphase. I was watching Enphase very closely yesterday around 305, 306. It closed right at 306. After hours was down, and then it was down pre-market as solars were generally weak today. But closed near the top of its range when it got above 302. We bought some. First Solar reported earnings and initially was down. After hours, ended up positive on the day, although off the highs, and holding these key moving averages here. FSLR and Enphase are very clearly the big two, although there was a lot of selling going on in the prior like 3 weeks, 2 weeks ago with it, but they very clearly put it at a bottom and reclaimed their moving averages after a nice move up. Was just the pause that refreshes, and they're going to go higher. But Enphase, pretty nice numbers here, up 81% on sales, 108% on earnings, and really just kind of putting in the right side of a base now. And we'll see how that plays out. So we added to that, and we also added 1% to a position that we took yesterday, PI. This closed near the top of its range, actually, yeah, right near the top of its range. All three buys positive now on Impinj. Big volume here. This looks like something that very clearly money is flowing into, and it follows the model that we see that we've used over and over throughout history of big gaps out of bases in stocks frequently lead to big gains, and we want to get on board and ride the wave as far as it will go. So we bought LHX, Enphase, and then added to PI, taking our beta from 3/4 to 1, which is basically even with the S&P 500. Including in that is a 16.8% position in UPRO, which is the equivalent of 50% long in the S&P 500. So bottom line, Apple sparks a rally. NASDAQ above the 21, S&P above the 50, Dow above the 200. Key levels for next week. You can see this 38.87 to 39.20. This was a big area back May, June, July, and September. Support resistance back and forth. We're in this range right now, 38.87 to 39.20, closing at 39.01 today. The declining 100-day moving average is right there also, 39.03 to 3900. And then looking above, we've got the 200-day. We actually got the 150 in there. I'll have to put that back on here. But on any pullback, we want to hold this 3842-ish area, which is the declining 50-day moving average, and then this key 3800 area, which is where we closed inside this range yesterday. Nice blast off out of there and making higher highs for the correction. So let's get to the 21 over 21 now, and as usual, I'm going to start with the stocks that we punted from last week for various reasons, and we'll start off with Northrop Grumman. Lots of these aerospace defense stocks acting well. We wanted representation. Northrop Grumman was on that since it reclaimed 2 weeks ago its 21-day moving average. Big shakeout on its earnings report, down to the 21 and bounce, now making higher highs. But we bought LHX today, so we're going to replace Northrop with LHX. What else got punted? Deckers reported not the best reaction, closed below the 21, did bounce at the 50-day moving average. There was some distribution there, as well as 2 days before the earnings report. MOH, a lot of good reactions from the managed care companies. Molina, not so much. Negative move down yesterday, closed right at the 21, but the other managed care stocks are acting better, so we booted Molina off. SRPT, this has been showing lack of relative strength over the past 2 weeks. It's just going sideways. Nothing wrong with it, but they've got earnings next week. It's in a base. We've got alerts set should it break out, but we want to replace it with some stronger things. So those were the 4 that came off. Now we'll start off with the 4 that were added, as this is in inverse order of when they were added. And let's start off with MEDP. This is another one. MedPace Holdings with a big gap up on earnings, higher high, second day, pulled back along with the market on Thursday, back above the high volume close. This is looking good, looking for a little bit of a handle and for the moving averages to catch up to this. I'm very interested in this as it does have nice can slim numbers. Impinj, you're already aware that we own this. There is the gap up, and we opened lower today, but this is what you want to see in a stock. Accumulation very clearly. Gap down, was drifting lower, even close to the bottom of the range of the gap up day, but look how buyers came in and just pushed it higher throughout the day. So that early weakness, if you were patient, you were rewarded. So Impinj is the second new ad. The third one is Enphase, which we own. We like to have stocks that we own on here. We do eat our own cooking, and you can see gap up, day two higher high, pull back, closed at the high of the range today. Good opportunity for us to get in it. And the fourth one is LHX, which is replacing Northrop Grumman as the aerospace representative in this 21 over 21 list. Now let's continue on to the remaining 17 from last week. Interactive Brokers continues to trudge higher, getting to the top of its base. Nice reaction after earnings, definite accumulation. CEG, this broke out. This is one of my favorites. Just didn't get on it with the breakout, but a higher high after the breakout. Looking good there. Netflix, we own this. Flagging for 2 days after a nice move up after its earnings report. AEHR, we've been adding to this several times now, a 3% position. Our last ad was this on this shakeout yesterday. Below the 8 EMA, back to the pivot. Perfect opportunity to add shares to this, as the sell-off was sparked by the wolf weak reaction to earnings and announcing they're delaying their factory that they're opening. But AEHR is a big customer of theirs, and there was no changes there. So AEHR responding with a 7% update today. O'Reilly, all the auto parts places are looking good. Not only did O'Reilly break out before earnings, it furthered the breakout after its earnings report. Texas Roadhouse, big shakeout on earnings all the way down to the 21, back below the pivot, but that's what good stocks do. They shake out and buyers come in. STNG, this thought about taking this off, but we still own it. It's above the 21. It's just putting in a nice flag after this big up move. The flag is on lighter volume. It does have earnings next week. We got to make some progress before earnings if we're going to hold through earnings. Hess, oils just continue to outperform, so its breakout hasn't pulled back to the pivot. Pullback today as oils were generally weak. Steel Dynamics pulling back after 5 straight up days. Its second day straight pullback, something I very clearly have my eye on as the industry is showing volume accumulation. ExxonMobil, good reaction to earnings, just continues to trudge higher along the ADMA. World Wrestling Federation continues to show accumulation along the ADMA. Eli Lilly continues furthering its breakout. They've got earnings next week. Dino, near highs, 2 days up, even though a lot of the oil stocks were down over the past 2 days. So this is very clearly a leader. HLIT, we've been accumulating this and just riding this 8 EMA higher. NBIX, biotech stock, making a higher high, bounced off the ADMA. They've got earnings next week. LNG, just kind of consolidating in this handle. You can see the cup and handle that pattern recognition is picking up. We bought it when it dipped below the 21 and got back above it. They do have earnings next week also. And finally, Vertex with the massive shakeout. I debated whether or not to take this off because this was a very clear sell signal before earnings, but if you were able to hold on and get back above it, it's above the breakout level, and this pretty much shook everybody out that wanted to get out. So this may just be clearing the landing, or the takeoff ramp for Vertex, and that's your 21 over 21 list. And that's going to wrap it for the week. As always, love to hear feedback from you, don@revereasset.com, or call 855-REAL-WEALTH. Remember, folks, it's not how much you make in the market, it's how much you can keep. We've been happy to be able to protect our clients' capital during this 27.5% sell-off. If you started with 100,000 with us, you're capitalizing from 90,000. If you started with 100,000 in the S&P 500, you got all the way down to 72,500. It's a lot easier capitalizing from 90 than it is from 72, so we don't have to play catch up. That's our approach. We protect the downside first. People are able to sleep at night, and then we participate in the uptrend by following our rules. If you're interested, give us a shout, don@revereasset.com. So wrapping up the week ending October 28th, this is Don Vandenbord telling it like it is. Just the facts here at Revere, because it's not how much you make, it's how much you can keep. Thanks for listening and have a great weekend.